joined by Walter Simpson, Ammar Najia, and Niamh McBurney. I'll introduce them properly in a minute. Ammar, derivatives trader at BB Energy, good morning. Let me go to you first. We have a few headlines on our bulletin, which is that one of which is that oil gains hold, as Iran puts investors on edge. Now, oil gain is a big, is a big assumption, because all we're saying is that they haven't sort of dipped below 60 again. Is this Iran geopolitical risk supporting oil? Is it fundamentals? Are we, what are we going to see give continued support for oil to catch up with other assets, for example?
I think
Oh, am I the only one who can't hear Ammar?
I think he's cut.
Okay, he's frozen. Okay, it's not me. Okay, we'll wait for him to come back. Niamh McBurney, Director of Control Risks, let me go to you with that question, even more relevant for your expertise. How concerned should energy markets be about the Iranian factor, what might be happening in Iran in the next week or two? A lot of talk, not a lot of action so far. And the oil price really not doing that much. Give us your assessment of where we're at now with a possible escalation in Iran or with Iran.
Thanks. Good morning. So yes, as you say, there's a lot of talk and not a lot of action, and that is very much where we are now, and probably where we're going to be at least for the next week or so. The audience will be aware of the USS Abraham Lincoln Carrier Strike Group that's been moving into US reports say Indian Ocean, kind of Gulf of Oman, that area. So it's been clear, that President Trump has been signaling over the last couple of weeks that he wants to create options for himself to be able to carry out some sort of action. And Iranian official comments in response have been pretty robust. There were comments on Friday saying, any attack, we will respond with all-out war. What does that even mean? Let's be honest, Iran has limited capabilities.
Exactly. Let me go to you with that. What does that all that mean? Because in June we saw what happened, but today it's hard to. What are we expecting to happen, if anything? We've had the internal protests, which have gone to another level, admittedly, and the comments from Trump on supporting that and will come in and etc. But of course, that's talk at the moment. But what are we expecting internally in Iran? Is regime change or transition now an actual reality?
So we don't think that regime change is particularly likely even at this stage, because despite the enormous pressure that the government and the system is under, there is still support within the political elite for it, and there's a number of different things you need to see before a country can begin to enter the phases that would lead to governance change. And Iran is not there yet. There's still cohesion in the political class. But when we think about how Iran might respond, we're expecting something, broadly similar to the events that those of us, living in the region have experienced over the last 2 years, a series of missile strikes targeting US assets in the Middle East. Iraq is obviously high up on that list, which was consistent throughout 2024. But then also, last year when Iran targeted Al Udeid Air Base, which was very successfully defended by American Patriot systems, we're expecting something similar, because even though tensions are slowly increasing, it's not clear to us that a definitive decision by the US has been made to prompt regime change. The US also has limited capacity to be able to enforce this. So what this ultimately means for oil markets is not a lot of change. Iran isn't about to go and block the Strait of Hormuz, particularly because, as far as I'm concerned, the JASC terminal seems to be not fully operational, as far as I'm aware. So, anything that it does to affect, oil flows from the Gulf region are ultimately going to hurt itself at a time when it's very, very vulnerable. So Iran ultimately has very limited room for maneuver. So although we'll probably see fluctuations slight in the price, ironically, a lot of this is a lot of noise ultimately for markets and very little immediate impact.
Okay, Ammar Najia, derivatives trader, BB Energy. Good morning again. Good to have you back. On that point, Iran, of what Ammar, of what is So what is supporting the oil price today? It hasn't moved that much really the last few weeks, you could argue a few months. You were last year you were saying, the only way is up eventually, but it's not really keeping up with other assets at all, even in the short term, despite the inflationary. Look at gold, we hit 5,000. So are you still bullish that oil will catch up? Are we going to hold the $60 for a while?
Yeah, I think
Longer.
basically there's a great deal of complacency, right? So oil is low, and people tell you, nothing's going to happen, it's not going to move. Even if there is a war with Iran, they're weak and nothing's going to happen, all this kind of stuff, right? Now, the difference is that when it does happen, everybody's going to panic, and not just. I mean, it's like saying that the US wants to take out Iran, openly talk about regime change, all the rest of it. But the idea is that if you hit them, then they're not going to respond. They're not going to be. They're going to be like, no, we send a little missile, whatever. So my view is quite the opposite. I think that basically, if you hit Iran in any way, they are going to strike back and strike back hard. Why? Because it's called deterrence. Because if they don't, then they're going to get more and more and more. So it beggars belief, basically. So what would you do if somebody was coming to tell you basically that they want to take over your country, throw you out of power, blah, blah, blah? Would you respond?
Nothing to lose.
Or would you? Of course, it's called deterrence. So yes, they will respond. Yes, they will close the Straits of Hormuz. Yes, financial markets will collapse. And yes, oil will absolutely rocket. That's my view. That's where the risk is. The risk isn't, they hit and they do nothing and whatever. That is not how basically markets work, at least not the oil market. And people will basically be buying and screaming hand over foot the second missiles fly.
Okay. Walter Simpson, former CEO for many oil and gas companies. Welcome back to the program. Great to have you with us, Walter. I mean, Iran is one factor. There's other geopolitical strains and macroeconomic uncertainties like tariffs, all which should be sort of weighing on oil. And many analysts saying $60 will be the average for this year, unless we have all-out war in Iran, unless we have something really dramatic to disrupt that. What is that? Would you agree with that, first of all, like in terms of what you'd be thinking the oil price might be doing this year? And what does that mean for new production, new investment?
Good question. I feel it's probably about right. I mean, it's been hanging in the $60, $65 mark for a long time. And right now, the geopolitics are bumping it up. The supply side is higher than demand, so it should be falling if you look at the fundamentals of oil supply, but it's not. It's holding up because of the geopolitical risk. So, and that's been going on for quite a while, a number of years, that balance between what people think might happen, and we've just heard examples of what might go on in the Middle East, against what the actual supply side is. I suspect that's going to continue. Uncertainty in the markets seems to be the norm at the moment, and what's going to happen next? Who knows? With the administration in the US predicting what their reaction to anything will be is pretty tough, I must admit.
Okay, Niamh, I mean, on the point of geopolitical support as well, we've had, obviously, we just had the Davos Forum and a lot of sort of macro talk where the economy is going, trade blocks, tariffs. You had Carney's speech from Canada saying, the middle powers now have to, start to sort of congregate and fight the big powers, US, perhaps China, Russia to a lesser extent. Would you think that has legs, that argument of the sort of reorganization of geopolitical blocks, if you like, from an economic standpoint as well? Should the US be nervous that the rest of the world is actually getting its act together, to fight against the sort of, I suppose, the military power that the US has and the bullying that enables it to have?
Well, I think we've already seen this transition take place and intensified during last year with BRICS and kind of the greater cooperation through that as an alternative forum for middle powers. The kind of the role of middle powers and their ability to influence events insofar as they can was something that we actually highlighted as something for clients to watch last year at the end of 2024. And I think if anything, Mark Carney's speech has has justified that position that we had. But I mean, should the US be worried? I mean, it still is an enormous economic and political powerhouse. But if Mark Carney, along with a couple of other premier G20 leaders, is going to try and move forward on this, we will need to see something else other than BRICS. We will need to see sort of an alternative to the G20 that doesn't include the US, for example. There are going to need to be alternative fora in which these middle powers can
Yeah.
work together and leverage each other's economic and political power. So is the US kind of power directly under threat? No, we're at the beginning of this path, not at the end of it. But are we looking at alternative future? Yes, absolutely.
Well, I mean, looking just at the Gulf, just sticking with Mark Carney, one of the middle powers you mentioned was Saudi Arabia, along with others, Turkey, etc. Niamh, just sticking with you there, I mean, how, given the Iranian situation and also the US-Saudi relationship at the moment, where it stands, I mean, what do you think the kingdom's approach is about sort of volatility in the region? Should they be nervous? We've obviously seen some other disagreements within the Gulf countries as well recently. But again, on the Iranian front, Saudi has been wanting things to sort of go smoothly there so they can have so that their economic program can continue. And we've seen some delays on that, haven't we?
Yes, yeah, we have. I mean, partly just as we've been talking about the lower than desired average oil price. But when it comes to sort of the dynamics in the region, it is incredibly important for there to be kind of broad, like political and regional stability. So it is concerning for the kingdom. I was in the kingdom just last week, but people there aren't explicitly concerned about the immediate consequences, I should say, if there is any military action. And to be fair, it's our position that there will be at some stage, primarily and first and foremost from the Americans, probably also the Israelis targeting Iran, and there will also be an Iranian response. It is a matter of days and weeks rather than months at this point. Because as we've often referred to before, that the events of June last year are very much unfinished business. But yeah, I mean the country is concerned, and you can see the statements from the Ministry of Foreign Affairs, and also the reporting about what MOFA is doing behind the scenes of trying to slow the pace of decision making in the White House, to try and create an opportunity for dialogue, at the very least between the US and Iran, although obviously that's fairly unlikely at this stage. But to Walter's point, with US President Trump, we can't rule anything out.
Yeah.
And to my point earlier, Trump is trying to create options for himself and make sure that, he has all of them available to him. So honestly, although we do think it is more likely than not that we're going to see some sort of military action, which would be unfortunate for Saudi Arabia, but for this point anyway, it's probably going to be fairly contained. In 6 months' time, we could be looking at a world in which there are Iranian and US government officials sitting around the table, thrashing out the details of a new nuclear agreement. Like, we cannot rule anything out because of the volatility of the decision making in the White House. But yeah, is this concerning for the kingdom? Sure.
Okay. Omar, I mean, back to sort of, I suppose, prices and the product range within the markets. I mean, last year we saw a period of time where refined products were sort of holding up the crude oil price in a sense, from a trade point of view, from a demand point of view. What is your outlook as we start the year in the middle of winter now in Europe, big freeze in the US? How is that impacting, product prices, and how might that impact the oil price as well, from a support point of view?
So if you look at the price today, if you go back to 2005, so 2005, oil price was trading at the same level it is now, 20 years ago. Is oil cheap or expensive? I mean, very simply, is it cheap or expensive?
Yeah, what I mean,
extremely
look at
cheap.
gold, it's 5,000. Of course, oil is cheap.
Exactly. Do you think basically we are the only people to notice that gold's at 5,000 and oil is where it is? Do we think that there's going to be any rotation of money flows into like an asset that's so extremely cheap in a time of geopolitical crisis? So it's again, if you think that basically we're going to have a conflict in the Middle East, and by the way, the time to worry is when you start here. The time to worry isn't now when people are beating their chest saying, we will destroy you and you will destroy us. The time to worry is exactly when they sit down and start to say, let's have negotiations. Because when they do that, you can be certain that there's going to be basically a war, and imminently, because every single thing that we've seen from Trump has been subterfuge, do stuff on weekends in order to manage markets, whether it be tariffs, whether it be wars, whether it be Venezuela, whether it be Iran, all this kind of stuff. So you got to watch basically when they start talking about peace and negotiating and all the rest of it. In terms of any negotiations between Iran and the US has said that not only do we want no enrichment, we want no ballistic missiles. There is a 0% chance. You can't ask people to commit suicide and basically try and convince the world that they're going to commit suicide and all the rest of it.
No trust in the system.
And all the trouble that we saw in Iran, they've completely handled it. The Starlinks were taken out. Everybody who was protesting was taken out, arrested, killed, what have you. And did any help come? Any help come from the US? Help is on the way. Blah blah blah.
Yeah. There was a feeling, not that help would come, but there was a feeling that the momentum of these protests was not going to end as previous ones have. It has for the time being. Walter, can everyone still hear me? Yes, I'm getting messages on my Zoom here. Walter, we haven't had you on the program since we had the whole Venezuela developments. And again, from a sort of an oil major investment point of view, into that, obviously the sector itself has a long way to go. Infrastructurally, there's a lot of money that needs to be poured into it for it to recover. But we've had mixed signals, haven't we, from US oil majors, being invited to go back in by Donald Trump. What would be your 2-year trajectory for Venezuela if all else remains equal? Are we going to see real interest at these oil prices again? And Venezuelan production is more costly, isn't it?
Well, it is, because it's a heavy oil, but it's not an attractive investment opportunity. The majors have been bitten many times in Venezuela, and you would want a long period of stability. It's billions of dollars of investment to recover the damage that's been done over the years of lack of investment in Venezuela. And in order to do that, you're going to need 2 or 3 years of investment in order to be able to get the infrastructure and production rates up. And then you're going to look for another 3 to 5 years to get your money back. So realistically, you're looking at 5 to 10 years of stability. Can anybody guarantee that in Venezuela? That's going to be a real challenge. So with the majors, I think it's going to be a very, very difficult sell to get them to start investing back in Venezuela. However, take a smaller independent, then you have the potential, with risks, of course, but the potential for a game changer. They could go from being a small independent to actually competing with the majors, because there is a huge opportunity if you have the appetite for taking on that risk. So what I suspect we might see is the majors passing, but smaller independents say, yeah, I'll give that a go, and I'll start to put some money in there. And I think that might be how Venezuela recovers its production.
Okay, Niamh, talking about that hemisphere in South America, Central America, again, from an oil markets point of view, but even sort of global economic sort of risk, Trump trying to expand his zone of influence, maybe he doesn't even care about the oil that much, but it's more about, also, nervousness from other countries in the region. Do you think we're looking at a policy that's here to stay, or is it, again, perhaps just a distraction tactic by Trump for a month or two while he plans something, in another part of the world? And again, from a China point of view, do you think there's anything relevant there, considering its interests in South America?
I think it's fair to say that at least under this administration, this policy is here to stay, because a number of the countries which are hot topics right now, Iran, Venezuela, Greenland, are all countries that were either a focus of the president's attention in his first term, or were components that he did talk about but didn't get to do much about. Greenland being the clearest example. So he's kind of really following through on a theme that he originally started quite a while ago. So there's no change there, and if anything, we're just seeing him kind of really being able to manifest his desires on that front. Is it necessarily a distraction tactic? Given how long it can take for US military resources to build up in the Middle East, if we think back to June 2025, it was there was a kind of lead up time of about 6 weeks, including a couple of diversionary tactics comments by the president himself. The movement of aircraft to and from Diego Garcia. So there are tactical elements which can be distracting, but I think the broader policy is very much the president's priority, and here to stay. And the question is now for us is that, in future presidencies, will we see a similar theme? That there's a considerable growing movement in the Republican Party in the US that isn't particularly happy with this direction. So I do think that, the future of this policy is uncertain beyond this presidency.
Okay, and of course, there's all that stuff happening domestically in the US as well, internally, with the ICE element. Omar, let's just talk about Europe a little bit, not necessarily your area of focus, but there's a headline on our bulletin. Europe's gas storage is draining at its fastest pace in 5 years. Obviously, we're in the middle of winter. They've now got a proper winter under their belt. But again, I mean, from your perspective on where gas prices might be headed, of course, you've got the LNG factor and you've got the piped gas. What's the outlook for that as we go into this year?
Well, I mean, Henry Hub prices went from 3 to, I think, 5. So, I mean, it's prices.
Would that be typical for this time of year anyway? I mean, should we expect that jump? No.
No, but I think basically that, you've had energy in general has been going sideways, weaker, whatever you want to call it, for at least, I don't know, 5 years, 3 years, before we had, the 2022 run up because of the war in Ukraine. And I think, geopolitically, you have the US and China that want to keep prices low. But I think in general, if you look back at the, narrative late last year, everybody kept talking about tsunami. And in fact, you had the EIA just released something saying that there's going to be 3.6 or 3.2 million of oversupply, so supply over demand for 2026, which is incredible because I really don't know how they come up with these numbers.
You're talking about gas now still, or oil?
No, I'm talking about oil.
Oil, yeah. But they did revise their demand figures as well, didn't they? They kind of came out a bit more bullish.
Tiny, absolutely tiny. They're saying that there's going to be a 3 million plus, overshoot of supply against demand, right? And what's the price doing? The price is moving up. So how do you basically, sync that kind of stuff together? So somebody's completely wrong.
Okay.
And I think basically I would take direction from price rather than from narrative.
Okay. Walter, I want to go to you on supply there and talk a bit about OPEC and non-OPEC supply. But there's our survey question today, which we just mentioned about the domestic US political instability and of course, US-Canada relations. So, will oil markets start to pay attention to those aspects and impact the premium, which is supporting the price today, but not moving that much? Agree or disagree? Walter, I mean, let's talk about OPEC and where it might be, do you think, positioning itself as the year goes on? Obviously, it's holding back on adding oil for the last few months. That's continuing to the first quarter. Many people saying it could extend further. What position do you think they're in today with all this uncertainty again to manage the market going forward? And $60 is not a great price, is it?
It's not, but it's manageable. But I think they're between a rock and a hard place, to be honest. I think they can only just keep managing production. I don't think they can do anything else. Everything's indicating that there's more supply than demand. And unless there is a major geopolitical shift, Iran being one of them, which wouldn't do any favors to OPEC, clearly for other reasons, I think they're just going to have to continue with the policy they've got, which is let's hold back on production and try and keep that unity in what they want to do. It's going to be tough, though. At these prices, people will be looking for how do I get more money?
Yeah.
So
and what about the question of the quotas that was meant to be the discussion point this year, wasn't it? Sort of finally adjusting those quotas to reality of what's happening. Do you think the paper is going to follow the reality this year?
I think they'll continue those discussions. It's been a point of contention between the OPEC members, OPEC Plus as well, for a long time. I don't think they've ever really resolved it, and I think it'll continue to be a thorn in the side of them, to be honest.
Okay, Niamh, just talking about sort of OPEC and members there, Iran obviously is one of those, but of course exempt from any of the quota deals, and Russia part of OPEC plus, and also kind of doing what it can. So let's talk about those two members of OPEC plus. Iranian oil exports, again, with the talk of what may or may not be happening soon. Have we seen any change in that in the last few months? What do you expect going forward? With all the economic stress also in Iran, are we still seeing as much oil on the water as we were, in the second half of last year, for example?
So at least from the data that I've seen, there hasn't been a change in production and yet. But obviously that is a concern if the protest movements continue to remain kind of across the country and start to affect producing areas. We could see kind of a similar reduction of production, much like we did in late 1978 when the revolution was really kicking off. There was a significant impact on production, and we certainly shouldn't rule out the possibility of that again. There would be a knock-on effect on exports. I think it's worth highlighting that in the realm of possibilities that we have, another is the US continuing to crack down on exports, because for all the Trump administration's talk of sanctions and things, they haven't been especially effective. I know this has been a theme we've been talking about for much over the last year, but that is another tool in their arsenal. If developments are going to unfold over the course of months and the rest of this year rather than weeks, which is, to be fair to say, I think they will, because revolutions do not happen overnight. They take a lot of time and energy, in the literal sense as well as emotional, physical, and so when it comes to kind of Iranian production and export, there are risks there, and there is the potential for more to come offline, depending on how things go. But then when it comes to Russia, I mean, the Ukrainian attacks against energy infrastructure have been effective, at least in kind of impacting some production. But yeah, as you say, the Russians will keep doing what they can, and they don't have a great deal of flexibility and don't really have a great deal of capacity to massively increase output. So if anything, stability is just a good thing for the Russians right now.
Okay, and of course for the Chinese, who are the biggest takers of Iranian oil, and of course they're Venezuelan oil buyers. There's a headline today saying Trump is easing off on letting China also purchase Venezuelan oil. I'm sure, I mean, we don't know what's going on behind the scenes, but China, again, plenty of oil in storage, if we believe what was happening last year. Omar, let's go back to you just to wrap up for us and get your opinion on what we're seeing with the dollar and gold. We saw gold break through 5,000. A lot of analysts saying that was going to happen this half of the year, but it's happened pretty quickly, hasn't it? Give us your take on why that's happened. Okay, gold is up, it's a hedge traditionally, but and has it got a lot more legs, and why? Why would that be the case?
Well, option one is because everybody has faith in the dollar and the US and G7 economies, that they're headed in the right direction. That's option A. Option B, which is more kind of reality, is nobody's buying US treasuries. In terms of sovereigns, they're all buying one thing, which is gold, which is why the price isn't important. When they want to buy, they just buy. They don't call up and say, what's the price today? So basically you have that. You have a US economy deficits that are unsustainable. And the only thing that they seem to want to do is basically to increase debt, to increase deficit, spend another 50-something% on defense, do
drop
all the
interest
stuff
rates.
Exactly. So the bond market's gonna at some point break completely. It's very interesting, actually. Look at the 10-year bond market compared to oil prices, and you'll see a very interesting correlation, right? So when bond prices drop, oil goes up. So when the interest rates on bonds goes up, oil follows. So it's going to be quite interesting. But I think basically what you have is something called fiscal dominance. They want to push interest rates down on the short end of the curve because they can't afford their 1.2 payments on their debt. But what's going to happen is the back end of the curve, where basically people, not companies, but like sovereigns, banks buy debt. They are basically going to fly. And what's going to happen is that everybody who's holding these 10, 30-year bonds, basically, they're going to see the prices drop. So when you mark to market that, it's going to cause a lot of problems, basically. So the reason why we're seeing everything, copper, gold, silver, everything, equities, skyrocket is because markets know that there is an issue, that the dollar is losing its status. And things don't happen like, they happen gradually and then suddenly. But the bottom line is, it's people are voting with their legs, and people are looking for, other places to park their money. Now, if you have all that, equities, housing, gold, copper, silver, platinum, you name it, but oil is at historical lows in real terms, what do? Do you basically sell a bit of gold, buy a bit of oil, sell 10% of your silver holdings, buy a bit of gold? Or do you basically say, no, everything's going up, but I'm going to be short strategically oil because it's basically going to go down as everybody pumps up their economies and puts their foot down on the accelerator and pumps all this money to kind of inflate all the economies, but oil is going to come lower. No, I don't think so.
That's not going to happen. Okay, thanks, Omar. And of course, the inflationary aspect of things we saw a lot of the economies last year weather the tariffs uncertainty and sort of, I suppose, push to kick the can down the road, but that the cost and inflation is certainly going to start to bite, especially if we see those Fed rates continue to drop. There's our answer for today so far. Agree, majority 57%. They will start to include those aspects more in the risk premium. Thank you so much, everyone, for joining us today, Omar and Niamh and Walter, and have a great week ahead. All the best.
Thanks,
Thank
guys.
you.
Thank you.
Thanks.